Zachary Carable in the house for Business Beast. How you doing, man?
All right, how are you?
I'm good. This has been actually a lot of business in the news. Big business making big news. Let's start with JPMorgan. So we had, I guess we're now in the beginning of week 3 since they said they might have lost a couple $2 billion due to the rogue trader known as the Whale in London. The newest news, I suppose, is that they're stopping their buyback program. What are the implications?
JPMorgan, like a lot of banks, like a lot of companies, has a program where, particularly when the stock's going down, they buy back their own shares. It supports the stock, and if the shares go up, they
makes everybody feel better about confidence in the
And also, it's something, at least personally, I feel like companies do when they don't know what else to do with their money. Right? They got this money piling up, we'll buy our own shares. However, the fact that JPMorgan is ceasing to do that is probably not a particularly good sign for their health. And they are partly doing it so they can keep paying their dividend. But as these things are looked at more closely by both Jamie Dimon, the CEO of JPMorgan, and the bank itself, it is increasingly clear that there was a significant breakdown of risk controls.
Yeah.
Hard to fathom, given that they only lost $3 billion, that there might have been a significant breakdown of risk controls, but it would appear that, in fact, there was a significant breakdown of risk controls.
So this is, perhaps systemic rather than the infamous isolated incident.
Right. I mean, look, you don't lose that kind of money, you don't allow these kind of trades to continue unless something systemically goes wrong, because no individual, at least theoretically, should be able to risk that kind of money.
Yeah. And do we think that the 2, which now looks closer to 3, is going to creep up to 4?
You know, these are, as finance gurus will tell you, these are sort of mark-to-market losses, meaning they're sitting on the books based on current market value. So the reality is 6 months from now, they could have made $3 billion on these trades. They could have lost $5 billion on these trades. No one knows. That is entirely about market direction, which is unpredictable, which is another reason why it was a complete breakdown of risk controls, because this could swing wildly, and as we know, JPMorgan on these trades was the entire market. There's nobody.
Right, that's the Whale issue here. So, final thing on this, because we got Rob Cox has a very funny little piece called "Ferrets in a Sack," and it does seem though that there's this all speculation about this I guess Diamond Freud is the term for it on the street. I don't think Jamie Dimon's going to go anywhere. He's still probably the best CEO in the banking industry, despite this screw-up.
His job is not in peril, nor is really the financial health of JPMorgan. I think you have to thread the needle with this particular story. It indicates, and in the pieces I did on the Beast, indicating that this is more about the risks of trying to avoid risks than it is yet another example of greed run amok. And banks are in this weird position where they are simultaneously terrified of a repeat of what's happened 4 years ago and what's maybe happening now in Europe, and they are terrified of missing out on upside. And that is just an unhealthy position. And while Jamie Dimon is the best of breed in this world, it is unequivocally a troubled industry.
The risks of avoiding risks. We're going to just marinate on that Zen cone for a little bit. Let's talk about Facebook. Obviously, big week for Zuckerberg.
Something
got married
over
the weekend as well.
Really?
I've heard that some people got rich, and he got married. But it was sort of infamously flatlined on its first day of trading. How's your crystal ball on this one?
Yeah. So on this, I have a different take. First of all, it takes a particular kind of Wall Street and media mentality to judge a company that did not exist 7 or 8 years ago, that now has a market cap of around $100 billion, a failure. Okay?
That's a very good point. Yeah.
So while the technical trading of their first day of being a public company may not have gone swimmingly, it also happened in a week where the entire world is freaked out and convinced that Greece and Europe and the whole financial system is once again on the edge of the precipice. So I think we are looking at this in the wrong way.
I buy that. Let's talk about something that people aren't buying or deeply confused about, which is Yahoo. Yeah. Under assault from activist hedge fund investor, CEO out for massaging his resume, might be the most polite term. New CEO in, with or Yahoo?
Yeah, so Yahoo is kind of like Hewlett-Packard over the past years, an example of a franchise gone awry and a board gone astray. So this has as much been an issue of a board that has not had a clear vision. There have been, I think, 4 or 5 CEOs in the past 5 or 6 years. That is never a good sign for a company. They don't even have a new CEO. They have an interim CEO. They do have a slightly altered board. The real problem with Yahoo is once you have missed a certain inflection point, like BlackBerry, like Nokia, like AOL, all these companies still exist, and they may, of course, like Apple did in the late 1990s, magically and marvelously reverse their swoon. But in a world where technology changes very quickly and they are at the cutting edge of those businesses, once you've kind of missed that inflection point, it is incredibly difficult to reconnect to it or reinvent it, because basically the competition is moving so quickly that you can't just adapt, you have to leapfrog. And yes, Yahoo has a lot of viewers, they have a lot of eyeballs, they have a brand that is enviable and a global recognition, but they also have a huge company that they have to support, and they are falling behind Google, they're falling behind all sorts of new places we don't even know about. Facebook clearly is in itself a competition to Yahoo. So I would not place the odds of them reversing this as particularly high, but as we know today, they sold part of their Asian businesses for well, they are about to, it's not announced yet, for about $7 billion. So they're going to have a nice cash infusion, at least.
At least. All right, Zachary Karabell in the House for Business Beast. Thank you.
Thank you.